First of all my information is right there on the screen, Luther Ragsdale. You want to contact me? Email admin@platinumrealestate.com. Best phone number, 678-855-8203, 678-855-8203. My personal website, lutherragsdale.com. Corporate site, platinumrealestate.com. See, I still have agents joining. Welcome, welcome, welcome. Good to see everybody on today. Want to mention some new things that's going on here in the corporation. In April, we are rolling out some brand new marketing for all platinum real estate agents. We have partnered with a marketing firm. So now platinum real estate agents, you are going to have the opportunity to have our marketing firm handle all of the marketing for you. What does that mean? So, we are real estate agents, not marketing experts. So as far as social media ads, Facebook ads, Google ads, Instagram ads, email marketing, text messaging, everything you need as far as marketing to have your business grow, you're going to have it now through Platinum Real Estate. You're going to have your own personal website. You're going to be able to get your own Google reviews. So now when a person Google you, you're going to have your own Google reviews. Some of you guys are on this line right now because you Googled Platinum Real Estate or you Googled Luther Ragsdale. And because of the good reviews, hey, you have decided to join us for this great training. So that's always a good thing, always a wonderful thing. Love that. So we're going to now set you up so you can have your own website, your own social media marketing, your own platform to grow your business. Here's the beautiful part. At Platinum Real Estate, you will focus on what you focus on best, which is helping clients, which is closing deals. That's what you do. We have a marketing firm that's going to specialize and focus on the marketing piece. So definitely extremely excited about that. Going to have a wonderful time. Next, you guys know every Thursday at 12:30, we have a training just like this. Our next training, Thursday at 12:30, we're going to talk about apps that can help you run your home office. So you can have a paperless home office so you can get more done paperless using technology. Apps, I always say there's an app for that. There's some very powerful apps out there for 2024 that you should use to help you run your business. That's happening next week, March 21st, right here at 12:30 p.m. You do not want to miss that training. That's going to be a great training as well. We are going to have some excellent, great training next week. You guys know we do this every Thursday at 12:30. One of the things about Platinum Real Estate, we believe in education. We believe in knowledge. I always say we get paid for our knowledge. The more knowledge, the more education. The more education, the more money you're going to make. So every Thursday, we do this right here. Hey, listen, and it's not only for Platinum agents, it's for all agents. I am looking here and I see we have a lot of agents from other companies. So welcome, welcome, welcome to all of the agents that was invited here today. If you're watching this online, welcome to you as well. To all of our Facebook friends, to all of our YouTube followers, welcome, welcome, welcome. Glad to see everybody, okay? All right. So, without any further ado, I see I have found her. Don't really have to introduce her. She's been partnering with Platinum Real Estate for well over a decade now. She is our preferred vendor. Miss Tamara Burch. She is the vice president of lending over at Guaranteed More Mortgages. Let me tell you why that's so important. One thing I love about Tamara is since she have a partnership with us, since she have been our preferred vendor for so long, um, she is vested in us. What does that mean? We, as a broker, a lot of times I have agents who have contacted me very upset, and they said, hey, I got a pre-approval letter from a lender. We paid for the inspection, we paid for the appraisal, and now I find out right before closing, this person never should have got approved for the financing. This person can't buy anything. Happens more than what I like to say. Also have had situations where agents have said, hey, you know what? I was told this person can't buy anything. And then we send them over to Tamara, and Tamara says, hey, let me get creative. This will work, this will work. And they end up buying their dream home. So what am I saying here? It's important to have someone on your team who you can trust, that you know. Here's another very, very important point. Not just a person that, you know, is a loan officer or somebody who just got their license last week. Somebody who is experienced, VP, vice president. That's important. If you look right there on the screen, local lender for the past 30 years. Very, very important. So we know that we are dealing with somebody that's credible, that's successful, and that's a straight shooter, right? Now, how do we contact Miss Tamara Burch? Right there on the screen, tamaraburch.com. If you look at the bottom, right there next to her pretty little picture there, it says tamaraburch.com. So you want to learn more about her business, visit tamaraburch.com. You want to call her, or you have a question or anything, you want to contact her, 770-916-1234. Right there on the bottom of the screen, 770-916-1234. No, excuse me, 770-916-1234. Miss Burch, Miss Tamara Burch.
Good morning. Well, good afternoon, right? It's good afternoon.
Yes, yes, yes.
Let me tell you, I'm super excited, Luther. You know, when we were talking about your marketing and your apps, I was just like, that is such amazing information. Wow. You know, a lot of people just don't know how to get started in marketing, and you're just going to make it so easy for them, like cookie cutter. I mean, as, you know, I used to be an agent, okay, many, many moons ago, probably, you know, we drove bicycles instead of cars way back then. I'm teasing. But I would have loved something like that. That just sounds incredible. Absolutely incredible.
Yes, yes, yes. We are extremely excited about it. Can't wait for this thing to roll out. In just a few weeks, actually just a few weeks, we are rolling that thing out, and so that's going to be great.
Wow. I would be like, me. I want to be the test pilot. Me.
That's right. That's right. It's going to be fun. Fun stuff happening. Fun stuff happening.
Exactly. Well, let's kind of get started here. I'm super excited about this one. We always start now with the market profiles. Thanks for you guys heads up on wanting this information. So whenever I do a class, I talk about where we kind of are, what's kind of going on in the market, you know, because you get conflicting information out there. You have one saying rates are going up, you have one saying rates are coming down. So it's all over the place. What is going on? Well, inflation still isn't quite under control, but super excited. It is much lower than when we started this craziness last year, right? So we're beginning to see that, but it did tick up a little bit. So nobody can guarantee what's going to happen here in the next couple of days, but strong indicators from the economists and everyone that we're probably not going to see a tick down on the interest rates for March, but looking pretty good for June. So pretty excited about that. The point really for this is for you to understand that even though this is lagging, even though we're seeing the market lag a little bit here, is to not focus on rates, right? I was talking to one of your clients literally about 15 minutes before jumping on here, and it was one of you guys as clients. And just really talking about a buy down, a 2-1 buy down or a 3-2-1 buy down. And so we have long conversations about that if we can get some money from the sellers to help them pay for it. So they're less concerned. And so really more so of if they're not concerned, we shouldn't be concerned, right? Because they still want to own a home, and now is the perfect time to be owning a home. So let's focus on that, right? Luther and I talk about it all the time, building your sphere of people, right, Luther?
Yes. Let's do one thing really, really quick, because we got a lot of agents with a wide range of knowledge. Give us the breakdown on the buy down, exactly how it works. Because once we say buy down, I want to make sure that nobody leaves here confused, like, okay, she said buy down, what exactly is it? Help us buy down a little bit.
Right, exactly. And that's why I love doing these with Luther. He really gets those questions in there good. And I guarantee you some of you are thinking of those questions. So, raise your hand or, post it in the chat. Let's get those answered, because I guarantee you if you're asking, someone else is thinking of the same question. So a buy down, let's just stay with 2-1 buy down. Are there a lot of different buy downs? There are. I take my time with your clients. I go over every single one of them with them. But the predominant one that we see 90+% is the 2-1 buy down. So let's use really simple numbers. Let's say the rate was at 7%. I'm not saying rates are at 7. I'm using it as a simple number for you guys. Let's say it's at 7. So on a 2-1 buy down, their first year, they're at 5%. Their second year, they're at 6%. And then all remaining years, they're at the start rate that they would have started with at 7%. The sellers help fund that. We place that in an escrow account for them, and we offset their payment from the 7% to that 5% or 6% to help keep that payment in a comfortable zone that they want to be in. What that allows them to do is to relax while they have their payment and monitor the market for the next 24 months to take advantage of a refinance. They don't have to jump as fast as everybody else. They can see the trend of going down and wait a little bit until they think they're getting close to that bottom before they do anything, while still having the comfortability of, let's say, that 5% that we're using as an example. So it is a great tool to use, and the sellers fund it, right? And because we actually service that loan, we place that money in the escrow account for them, and that money can be used later to either lower down the amount that they're going to owe or to help them refinance for whatever is left in there. Sometimes on a buy down, you lose the money. With guaranteed rate affinity, you don't if you refinance. We make sure every single dollar gets used to help you, whether that's to continue paying for the buy down or get you refinanced and use the money again. So a lot of people want that because they want to enter the market, right? What are we seeing? We're seeing increases in value, not decreases in value overall. I'm not going to say every market, there's no such thing, but overall, we're still seeing an increase, right? And so it's important that people understand there's several people, I talked to a lady just a couple of days ago who thought she'd wait for the market to collapse. Well, she waited 3 years, and now she's probably out about $100,000 in increase, and we're talking a much lower price point now. So we want to encourage, don't put your feelings into it. What are their feelings and what do they want to do? And understanding that this market isn't turning around, right? There's a lot of homes that are rental properties forever. Now is the time to secure their home, and we can look at a refinance later. But nobody guarantee that they're going to come down. We don't do that. We don't have crystal balls here. Okay. Luther, did that get your question answered, or did you have another question pertaining to that?
No, absolutely perfect. I think that helped everybody quite well. Absolutely perfectly good. So we're good. Thank you.
Yeah. So what we wanted to talk about, look at these pictures. I love these pictures, don't you, Luther? What we wanted to talk about is that house, because I'm getting a lot of calls from you guys on, and that's one thing to do. Okay, I'm going to stop myself here because I came up with a thought that wasn't even written down. Is if you're looking at a house and I've approved your borrower FHA or VA or even conventional, and you want me to see some pictures of that home before you write an offer, which a lot of you actually do, and we have those conversations before the you put in the offer, and your loan officer should be doing that. They should be helping you. Don't write the offer without getting on the phone. Let's have that conversation. Save trouble later for situations. Is this a loan that we can close for you in 10 days, which I do? Or is this a loan where we're going to need 30 or 40 days because it's super complicated? Definitely be having those conversations. But I get calls all the time. Tamara, will this home go FHA? Will this home go VA? And I always start with, well, what's going on that made you think it wouldn't, right? So let that person look at it before you write it. Just because the listing agent said it could go FHA or VA doesn't mean it's going to pass that appraisal inspection. Right. And so that could be a new agent, somebody who doesn't really know, or they haven't had an offer on the home and they're trying to show the sellers they want to get it sold, etc. And they'll deal with the situation later. Well, that's not fair to our buyer. We don't want to deal with it later. In some cases we do, right? We get a surprise, but that's our buyer's money on that appraisal and our buyer's money on that inspection. So let's try to protect them as much as we can. You'll never get 100%, but how about we reach for 98 or 99%? That's always my goal here. So you're looking at these pictures and going, Tamara, we can't do loans on these houses, right? But this is the only house in this area where my person wants to live because it's close to mom and dad. It's close to the sister. It's close to the church, right? Whatever their reason, this is their area and they have two houses to pick from. And you're walking in both going, I'm not going to live here. So remember at the beginning, we talked about not what we would do, but what they would do. So the first thing when you walk through one of these homes, in the back of your mind, you need to immediately change how you're selling this house, okay? Because the person said this is their area, but a lot of people can't look through the lens of what would that home look like if we did some work to it. So instead, we have to show this house like it is an HGTV house, right? So we're talking about putting a new roof on, adding an extra 1,000 square feet on the back of the house, adding a garage. Maybe that's what the person wants more than anything, a 2-car garage, right? Could it be done? Is there enough space for it to be done? But don't guarantee because you need the county to actually say you can do it. And maybe new windows, maybe a new kitchen or bathroom or floors, right? Look at this yellow kitchen. I apologize if you love yellow kitchens, but me, I couldn't do this kitchen, right? So, but if I was showing this house, I'm going to show it as what if this was all new floors? What if this was all new cabinets and some with glass doors so you can see your pretty china, new all stainless steel, stove, dishwasher, refrigerator, etc. So how does that look? Okay. So when talking to them, you're trying to come up with how much is this roughly going to cost and what you think it's going to cost. I suggest you add 15 to 20% more than what you're saying coming out of your mouth to your customer. So if you're looking and you're thinking 30,000, tell them 40 or 50,000. Okay. You would rather give a higher number and be coming down than giving a lower number and going up. Everybody always would rather it be that way, right? So what can be included? Okay. You can include pretty much almost anything. Not everything, but almost everything. You're looking at that pink house. That pink house right there could be absolutely beautiful and add another square feet. I've had people take off the tops of their houses and take a ranch to a 2-story. I've had people cut out the back of the house, add additional foundation, and then add another 1,000, 2,000 square feet on the back of a house. So the sky is the limit here. And what I like to always talk about here, and then we're going to also have some questions, is there are multiple types. Now, we're not going to the next slide yet, but VA is going to be its own separate conversation here. And I did say VA. I really did say it. I know some of you are on there. Did she say VA? She did. FHA and Fannie Mae are the predominant ones. Freddie also has one too, meaning FHA and conventional is going to let you do this. So if you look at a home and they say no FHA, no VA, it's because there's something wrong. You probably are looking right at it and know what it is, but that doesn't mean you can't do an FHA 203K. That means we're going to allow these things to be done. Now, I'm not going into huge, great detail, but FHA has 2 programs for this. One little quick fix. Maybe it is just the floors. Maybe it is a heating and air conditioning. Maybe it is just a roof. One of these major ticket items, maybe they just want a new driveway. And let me tell you, I just did that. It cost me $20,000. I'm not happy about it, but I put it in fact, they're putting it in today and laying the concrete today. So, these things can get pricey. But FHA allows us to put these items in. And so we'll go a little bit more, but I want to stop here for a second and see what kind of questions we have. And then I'm going to cover how much money we're going to give, what credit scores are, and what down payment we need. Okay, so we're going to cover that in a second.
Good. Wonderful. Okay. Look, you guys, raise hands. I know I have questions. If you're on this, you need to have some questions, right? If you listen, raise hands, or if you cannot talk live, shoot the question in the chat. We have a hand raised here. Yes. Talk to me. You are unmuted. Unmute yourself. Questions for Miss Tamara Burch. Okay, let me see if I can get this unmuted here.
I had the same problem, Luther. It happens for sure.
Yes, it says Miriam Williams. Unmute yourself, Miriam. You are free to unmute yourself. Your hand is raised.
And I know Miriam.
All right. Question here. All right, well, maybe something's wrong with that. Listen, okay, so Tamara, question here. So help me with this, because you were saying, okay, basically the sky is the limit. You said a person have had a 1-story, taken the roof off, made it a 2-story. I'm trying to wrap my head around this. So you said the sky is the limit, so I can take a $50,000 house, make it a $600,000 house. I can do what? I can do HVAC. I can do heating, cooling, roofs. So basically, is there, look, I'm just kind of wrapping my head. Anything and everything with this rehab deal here?
And that's such a great question. And Miriam said she accidentally pushed it. She sent me a text.
Oh,
So uh the one piece I'm going to cover here, which was my next piece, so that's a good question, you're segueing me into the next piece, is you can't over improve for the area. So what we're seeing is some areas you've got this little dinky house, but now around them are all these $400,000, $500,000, $600,000 houses because they've gone in and they've improved them. So as long as the appraisal after completion matches, then we're good. If you try to buy, and here's a simple way to look at it, you're buying a $200,000 house and everybody in the neighborhood is $150,000, you can't do that, right? You're buying a $200,000 house and you're seeing all this reno going on, and the houses around there are 300,000, 400,000. Then our house, when we do it, will more than likely appraise. So we can add an extra $100,000 or $200,000 to fix up this house. And yes, there are people, the house right next door to mine, that's getting the new driveway, they tore off the top of the house, they added square footage onto the top of the house and added a 3-car garage. So yes, you can do that. And why? Because that area is now pulling in 6, 7, 800,000. So by them doing that, they had the room to take this itty bitty house and convert it into, almost a 4,000 square foot home. So it really depends on what's going on in the area, but you look at these houses different. And I know Luther's a great agent. He might have some comments here. You want to be showing the house as what it will look like through their eyes of what it's going to look like, not what it looks like today, right? Okay. What'd you think, Luther?
yes, 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 yes. So, so what you're saying is the appraised value is the most important thing. So I find a house that's 200. Everybody in the area is rehabbing. I think it can go for 500. So I got $300,000 worth of rehab here. So you're telling me if I want to take this house from a traditional looking house and make it more contemporary, you don't care about that either, right? If I'm going to take this traditional style and make it more of a contemporary style, I can do that as long as I stay within that appraisal.
That's right. And the other big piece is, and this is where I see a lot of mistakes. I get calls on this every day. And I reiterate it. So I'm going to reiterate it here. If I give you an approval for 300,000, it doesn't mean that you're out looking at only these types of homes, but you come across one, right? And this is the exact area they want to be in, right? And they could see what the house would be going for. But they're going to need 100,000 to fix it. But your approval's 300 and the house you found is 290. We're obviously not able to do that. If you are getting an approval from me for 300, we really probably should be looking at homes around 200, 225, right? Because we need room to add whatever repairs we may be doing. And not everybody wants to go and add another story on the top of their house. Some people are just looking for kitchen, bathroom, new hardwood floors, painting, turning a carport into a garage. They're looking for those types of things, right? But I wanted to make sure you understood the sky's almost the limit here, as long as when it's going to be appraised, and they're going to appraise it based on our contractor bids, will it appraise for what the house is going to be like when it is finished? Make sense, Luther?
Okay. So let me make sure. This is some important points. Let's make sure that these agents get this. So if I'm approved for 400,000, my credit, my income, everything says I can pay for a mortgage up to 400,000. If I find a house that's 400, but then I want to rehab it and it's going to appraise for 500, my income, my credit, do I have to be at the 500 or do I have to be at the 4, or is that 400 good enough to marry?
So your max then is 400. We would not be adding anything because you're already at your maximum. So if you see houses, and a lot of these homes, they end up being deals, right? Because there's something really wrong with them. Look at that pink house. And so we need room. So if you look at this pink house, which goodness gracious is 400,000 and you're approved for 400,000, you have no room to do any fixing. None,
Gotcha.
zero. Okay, but if that pink house is 150, well, we have $250,000 to turn that into a gem.
Yep. And
Yep.
agents, that's huge. Agents, that's huge, huge, huge. Agents, whatever your client is ultimately approved for, 400. That means after rehab, after everything, that's where we need to end in that. Agents, if you have somebody approved for 400 and the most Tamara's going to give them is 400, and the rehab starts at 400 and going to end up at 500, they can't afford it because they can't afford the mortgage at 500. When it's all said and done, rehab done, kid and caboodle, whatever that number is, that's where we need to end up with, not start off with. Let me say this again, because we can waste a lot of time and we can go out there and then we can get all toe up, right? Tamara, huge. This person's approved for 400, and we go out and do all this rehab for 100. Now the house is worth 500, but they can't afford the mortgage, right?
Right. And so definitely be talking to me, hey, Tamara, I'm thinking about this house. And you have some customers who watch so many HGTV shows, right? They think they're going to get the deal of the century and the house is going to be worth so much more than they do for the work. And that's actually a lot of cases not the case. It is one thing for somebody who rehabs houses regularly, maybe me or Luther or some other people, where we can make that happen, right? But when you start bringing in contractors, sometimes that's not the case. But if that home is where they want to be, and there's only a couple of homes there, then this is a good alternative for you, but you have to show the home in a different way. You cannot show it like the pristine house. Okay. It's very important. They have to see what their home, basically, they're building their home to meet their specifications, but the home's already there. So we're going to renovate it and give them what they need. Maybe they're even putting in a wheelchair ramp. Or maybe I had one who put all new doors in so that every single door they could put their wheelchair through. Okay. So these are things to be looking at. There aren't a lot of homes in some areas that you could put wheelchair doors throughout the entire house. So you're going to need to renovate that house to meet their needs. Instead of saying this home doesn't meet it, how could we make this home meet what they need, right? That's a great agent. They sell it that way, right? It's not really selling, it's showing them what could be, right? Showing them what they could be. And FHA lets you do that with as little as 3.5% down. So that's amazing. We typically do about 620 credit score on FHA. Okay. But we go down to 580 on these loans. If I can get it approved, we will do that. But 620 is more like the norm. And we're going to do single family all the way up to a quad. But if you're getting into duplexes and quads, and I don't want to go in great length here, you reach out to me. Let's have conversations. Now, some of them don't need general contractors. I get this call all the time. If it's something like I'm only putting in the floors and I went to Home Depot and got the flooring, right? That's not us hiring a general contractor. So if you're keeping that a low amount under 30,000, typically we might be able to avoid a general contractor. When you're adding tons and tons of things, Tamara, we're going to do a new kitchen. We're going to do a new bathroom. We're going to do new floors. We're putting on a roof. We're changing the carport to a garage. Whoa, whoa, whoa. Hey, that's a general contractor. Okay. So that means we're going to hire a general contractor and we're going to hire a HUD consultant. And the reason you want to reach out to me on this right away before you write a contract is we want to get the right dates in there. And Luther talks about that all the time. We don't want to put the wrong financing date in there. We don't want to put the wrong appraisal date in there. These take longer to close. We're waiting on bids from contractors before we can ever order the appraisal, right? Because we don't want an appraisal based on that pink house. We want an appraisal on what the pink house will look like. Okay. So we want to tell the appraiser exactly what we are doing here. And I need to make sure I'm giving you all the right time frames to protect your person's earnest money. It's critical. Please do not write these offers and say, oh, Tamara closes loans in 10 days. I do. I don't close these in 10 days. These take longer. So let's have that conversation. But I also might see something, right? You're saying, okay, Tamara, we're looking at 101 Smith Street. I'm going to pull it up and I'm going to say, what are you thinking about doing to 101 Smith Street? Well, we're going to do this, 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 and this. And I'll be like, hey, did you see the railing? We're going to need to add the railing. Hey, I see something wrong with the roof. Why aren't we adding the roof? Is there an issue with the roof? Let's get that looked at. Hey, we're not doing anything with the pool. We'll handle that later. No, 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 no. You got a green pool. We're going to handle the green pool right now. So what I mean by that is I'm going to engage you in these conversations. So if we need to add something, it's twofold. Do we have room to add that item based on how much they could buy, based on what would that house appraise for potentially? I could do a rough estimate with you, but it's a rough one. And so we want to look at that together. We also want to look at the payments. So I'm going to get on the phone with your customer and make sure, hey, you're okay with this $150,000 house that's now going to be $400,000, and here's going to be our payment. Are we good with that? Because I don't want you to go through work and doing all this and they're not good with it, right? Let's get it all leveled up right at the beginning, right from the start.
Absolutely, absolutely. We have a question here. Question. You can unmute yourself. Who is this? Miss Judith, you can unmute yourself. Yes, question.
Hi, good afternoon. Thank you so much. I'm learning so much from this. With this loan, is this loan different from like the typical loan? Like, is it two separate loans that's going to happen? Like the person would have a FHA loan and then the DSR loan?
That is such a great question. That is a fantastic question. Thank you. No, this would be an FHA first-time homebuyer loan, or, and because you brought up DSCR, I'll cover that. I know we just closed a bunch of loans together. A Fannie Mae or Freddie Mac, so that's conventional. We can also do those for primaries, vacation homes up in the mountains they want to redo, or even an investment property. Okay, but these aren't DSCR loans. DSCR loans are a whole different kettle of fish. And if we need to do another training for everybody else on here, because I know you're good at them, I'm happy to do that. But you can do a conventional loan with as little as 5% down, and the 5% is on the total loan. What is it when we're finished? Not what is it when they're buying. And FHA is going to let you do it with 3.5% down on the total loan as well. Okay, so we have lots and lots of room to add. I hope that answered your question. Was that good?
So, yeah, so you're saying, so this is a typical like conventional loan, but they can also use like the difference to do the rehab. Like, let's say the home is 300 and they have 350 for rehab, but they're approved for 400. It's still just one loan, but they can use a certain amount to do the rehab.
That is correct. That is, you've got it. You've nailed it. So they might not be going to 400. They don't need 400,000 worth of work, but they need 50. So maybe they're going to 350, right? It's one loan. It's one FHA loan or one conventional loan. It's not a first and second.
Okay, perfect. Thank you so much.
Absolutely, Judith. Thank you.
All right, we have another question. You can unmute yourself here.
Hello.
Hello, how are you today?
I'm good, Mr. Ragsdale. Thank you for having me.
Good,
My
good,
name
good.
is Sonia Hill. I don't know if the question is relevant or not, but I'm going to ask it anyway. And maybe you can guide me to where it is I need to be or go. I own my own home right now, and it is a condo. Do any of these rehabilitations apply to someone that has one that needs like renovations and things like that? Because I had an incident where where I'm not able to do these things at this particular time. But when I did first time home buyers back in 2009, I had called HUD like a couple of weeks ago, and they were gonna come out and do some renovations for me, but they found out that I didn't get my home through HUD. So I have a home, and if I wanted to do renovations, the reason I asked because I heard us say something about disability ramps and stuff like that in homes that maybe you may see that you may like. Does any of this apply if you wanted a second home or to a home that you already have?
So that's an excellent question. Thank you, Sonia. I appreciate you putting it out there. You can do it on homes you currently own, right? So I've had some people do it where they want to maybe rent it in the future, but they want to add another bathroom. You could also do it on a vacation home. So that's a refinance 203K or a refinance renovation home style conventional. And so sometimes a buyer will move into a home and we won't do the 203K right away. They'll go in, they'll live in it for 6 months or 7 months, really determine what they want to do. So they're closing with you immediately, and then they're calling me back later. Okay, Tamara, I've got all the bids I want. I know exactly what I want to do now. And so sometimes if the home can appraise for what they're buying it for, and it isn't the pink house, maybe it's the yellow kitchen house, then we go ahead sometimes and just let them close and really get in there to determine and take their time on what they want to do. And we do the renovation loan later. So that happens quite a bit. So if you do own a home or you own, sometimes investors call me, hey, Tamara, I could get top dollar if I add a third bathroom. I want to put in a new kitchen and a third bathroom so that I can get top dollar when renting this. My tenant's moving out. Now's the perfect time for me. We will do a loan for that investor as well.
Okay. Does it matter what type of home it is? Like I personally would like a ranch style brick home.
Nope. We just don't do manufactured or modular.
Okay. Does that? I'm trying to learn the verbiage of stuff. Does that mean condo, townhome? Because you know they're like connected to each other. Does that?
Yeah, you can do condos and townhomes.
Okay.
Yep. Just not those mobile homes that you're gonna put on a wheel and drive away. We don't do those.
So,
those are depreciating assets.
yeah. So my credit score that still includes a credit score of 580 to 620, right?
Yes, we do those with a lower debt ratio of 45%. Please feel free to give me a call. My number is right there, and we can go in great detail about your specific situation.
All right. I appreciate it. And thank you, Mr.
Absolutely, Sonia. Absolutely. And Luther, I just want to touch base because I know we got about 8 minutes here. On the next screen, I do want to touch base a little bit on the next one. And why it's so important is, yes, you can do a reno on a VA. Okay. So VA, it's available for you to do. The big piece with VA is that you can't, and it's 100%. Okay. You can't do structural, meaning I'm looking for, Tamara, we're putting on a roof, we're doing a kitchen, we're doing a bathroom, I'm doing HVAC. So we want our veterans to be able to do it too. Okay. So VAs are available for them to be able to do these loans as well. And typically we do not go below a 580 credit score on these either. But the sweet spot for VA is 620. They really, really like it 620 and above for VA when we're trying to approve it. And I mean VA. So we take a look at the project. We go into great detail. As you know, I own 2 VA houses myself, so we talk the talk. We're going to have that conversation. And so sometimes you might get a VA person and they say, I already own a VA home. I can't go buy this new home. That's not true. You can own multiple properties. Okay. And so definitely be talking to veterans. They don't require a down payment. Okay. So VA is a big, big, big ticket item here. The other thing I wanted to cover is I do have a checklist, a kind of a peek of it on the next screen. If you'd like a copy of the checklist to see what is entailed in a renovation, I'm happy to send that to you. Either text me, call me, or email me. You've got all three right there. You can do that and I will forward that to you. Some of you actually have that with your pictures on it because you belong to my marketing group. So you're also welcome to have that with your picture on it if you already belong. Just text me and I'll send it out to you. But I wanted to stop here because I know we got a few more minutes and I wanted to make sure I'm getting any questions answered. And I also want to let you know I'm so excited about our next class. Super excited. Luther kind of talked about it. We have the Fannie Mae conventional $8,000 grant. We will be going in detail on this $8,000 grant. It's a big thing. There's 21 cities that is involved. I know I got a lot of Florida people on here. So Florida has several cities involved and Atlanta is involved in it. So that's super duper exciting. We'll also cover the 101% FHA and we're going to cover what is going on with the condo market. Okay, because some of you are selling condos and you and I have been having lengthy conversations. I'm getting calls on that 2-3 times a day right now. So we're going to cover what's going on in the condo market as well. That'll be our next training. So I'm super psyched about this $8,000 grant. If you have somebody you think might qualify for it, you don't have to wait till then. You know, you can always text or call me and I'll help you with it. Luther, any other questions?
Excellent. Yes, I have a question. The question is, Tamara, is there a maximum income limit for FHA clients?
No, there is not. Super sweet. Very nice. Very nice. And, you know, we keep increasing that loan limit with FHA. So definitely reach out to me because I'll have to pull up your county to see what your loan limit is. So that gives us a lot more room to maneuver. You know, when I first started, okay, that's aging me out here, Luther, right? FHA was like $200,000. You know, now we're seeing FHAs in the $600,000-700,000 range. So, so definitely reach out and we'll discuss that as well.
Very good, very good. Any other hands? Any other questions? Yes, we have a question here. Yes, what's your question?
Hello. I was just wondering where I could go to find the requirements for the FHA and VA, the different loans.
So you asked where you could go to get the requirements. Are you talking about the requirements for the guidelines for this 203K, or you're just talking about overall?
Just overall.
Okay. Well, FHA's guidelines is about 4,000 pages. And
yeah,
conventional is more.
Let me hop in. Yeah, let me hop in. Listen, I'm a real estate broker, been a broker for 30 years. I don't look at it, don't know about it, really don't care about it. Now, as Tamara said, and I would be willing to bet you that's not something that Tamara sits around at night and studies every night. You know what I mean? So as a real estate agent, here's what I would highly recommend. Spend your time prospecting, advertising, making your phone ring. When your phone rings, grab that lead, send it to Tamara, and let her worry about all of the different guidelines and all of the different stuff. Why? Because as an agent, am I going to sit up there and say, hey, here's the guidelines? Because I can't say who qualifies for what. I'm an agent. I don't have mortgage license. I can't pull credit. I can't talk about who qualifies and who don't qualify. So is it really a need for me to know and understand and memorize these guidelines? No. Is that really the point of this training? No. I want to know enough to say, let me send this person to Tamara. Let me take another step. Agents, let's not get carried away with this reno loan. Okay, so agents, when I get a lead, I want to get them approved. I want to go out the easiest, the quickest, the shortest amount of time for me to get paid, find the house that they need, find the house that fits their requirements, write the contract, close. That's best. What I don't want you guys to start doing is right off the rip, straight off the jump, hey, reno loans, let's do a reno. No. Here's when the reno loan comes into play. I spend my time marketing, advertising, prospecting, right? My phone rings, I send them to Tamara. Tamara says they are approved for 500. I'm going out, finding the house, 500 is done. Here's where reno comes in at. This person, and I want to make sure you guys was listening very clearly. Tamara said, I run into a house. This is the house for them. As she said, close to church, close to school, close to mom, close to dad. There's nothing else, right? This is an isolated situation. This is the house for them, but it needs rehab. Now I'm calling Tamara. I have a situation for the rehab loan, right? If you say, client, let's do this fancy rehab loan, I'm going to find you something for $200,000 and we're going to rehab it for $400,000. You will be looking for a long time. You're not getting paid. And your client will get frustrated. And if you put that in their head on the front end, your deal is going to struggle. I would not mention rehab loan until I have that isolated situation. Then I'm going to call Tamara. Tamara's going to say, yes, this is approved. Then I'm going to say, hey, client, I know you love this house. This is your dream house. Now let's talk about snatching off the roof and putting on another. Make sense? Did I answer your question?
Yes, you did. Sounds good to me.
Yeah, and I agree with you, Luther. Yeah, this is just so that you have knowledge that when you're looking at that house, and I gave you an FHA buyer and they can't buy it, they could, right? That's all this is doing. Another training. I love doing these every month for you guys. It just gives you more information and lets you grow. But do not go out looking for these. I found one. Tamara, can this buyer convert over to this loan? And then let's take a look together, because I might go, well, you don't really have room based on the comps. There's no room to add anything here. You need to step away from this house, or they're going to have to buy it conventional or something else. So we want to stop it before we get their hopes up.
This is not our first option. This is our other option, right, Tamara? Right.
Yeah, let me tell you, these people get frustrated when they're trying to redo a house and they have contractors in there. This is our last option, not our first. It's a last option. When I talk to investors that do my home style, that's a whole different kettle of fish. They're used to it, right? A 203K first time home buyer, that's a whole different story. We keep them calm, we help them through it, but it's still frustrating to walk into your house you just bought and super excited to own, and they're putting in a whole new kitchen and there's dust everywhere, right? So last option. But we want to know that if that's their house, there is an option.
There you go. And here's what I hope everybody leave this training looking at is, I'm going to keep doing what I do. But if I run into this house and this is the house, I have another option. So now I can pick up the phone and call Tamara. I'm not trying to be the professional. I'm not trying to go out here and talk to my client about it. I'll pick up the phone. I'm calling Tamara saying, hey, do you think this will work? And then Tamara says, yes, let's move forward. Or she says, no, this will not move forward. But it gives me an extra tool in my toolbox just in case it's needed, but it's one of the last tools that I'm probably going to use.
Very good. Absolutely. And I just want to thank everybody for all your calls and your business. And don't be afraid. Reach out, text me, call me. That's what I'm here for, to help you, and definitely help your clients. And know that not everybody's going to be qualified right up front. Okay. So that's why we put them on the plan, to get them there. That's what's important. So 770-916-1234. We can even talk about marketing. I know I do a lot of marketing with Judith. So please feel free to reach out. Happy to help.
All right, I have another hand up here. Yes.
Hi, Tamara.
Hi, how are you?
It's Miriam. I do have a question now. That
Sure,
question
Miriam.
is, before you were talking about, you touched a little bit on qualifying them for the multi, 2 to 4 units, right?
Yep.
For VA. And so I had this posed to me before, and I did not know how to address it. The question is, if someone is trying to purchase using their VA and they want to do 2 to 4 units, how do you qualify? How are they qualified? Because those levels have extended. They're much higher than they were before. They were increased. So how do you
Yes.
guys gauge that?
So what she's talking about is VA no longer has a loan limit if you don't currently own one. If you do own one, then there's limits in place, but there isn't if you don't own one. So we close sometimes VA borrowers for $1 million, right? So they can't be discriminated against anymore, which is amazing. Love it. And this is I think this might be a class for us, Luther, doing a training on the power of a first-time home buyer with a duplex, triplex, or quad, because we can use the income from the other units that's not being occupied as the primary portion, and use that income to level up how much more they can afford to buy. So we use 75% of that income, but I think that might be a good training class. I think that's a great one. Thanks, Miriam. But Miriam, we're going to use that income, so feel free to give me a call. We can chat about that. Absolutely.
Thank you. Great.
You're welcome.
Good. Excellent question. Listen, TamaraBurch.com, www.TamaraBurch.com for any questions, comments, anything that you might have. Tamara, once again, thank you as always for this great training.
I appreciate you, Luther, so much. And then don't forget, guys, we're going to cover that grant, the FHA 100%. And we do need to talk about the condo market. So let's have that conversation next time around.
We will do that as well. Do not forget, every Thursday, 12:30 right here, we have our live Zoom session every Thursday right here at 12:30. If you want to know when the next training is coming up, visit my website, LutherRagsdale.com. You can register for any and all training at my website, LutherRagsdale.com. Real estate agents, if you're a licensed real estate agent, want to learn more about career opportunities at Platinum Real Estate, visit our website, PlatinumRealEstate.com. You guys, as always, thank you for your time. Have a great weekend. I'm Luther Ragsdale. We'll talk to you really, really soon. Thank you. May God bless you.